Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. Now in today's video, we are diving in and we are looking at the top 2 Vanguard ETFs to buy and hold forever. So I hope you guys all enjoy this video. If you guys do, hit that like button, subscribe. And if you guys are new to the channel, I just released a brand new swing trading course where we talk about my strategy, my mindset, how I find stocks, all that good stuff. I'll put that down below. And you guys can use code YouTube to get 20% off. So make sure you guys check that out. And on top of that, tomorrow we have an amazing day. We're going to be doing a trading workshop where you guys can come in, ask questions, hang out. It's going to be super fun and exciting. And that's from 1 p.m. till 2 p.m. So check that out. So guys, let's dive into this, the top 2 Vanguard ETF. All right, before we talk about the top 2 Vanguard ETFs to buy and hold forever, first we need to understand what an ETF is. Well, in simple terms, an ETF stands for an exchange traded fund. And honestly, what it is, it's like a pool of different companies all together. The reason why a lot of people love this is because it's super affordable. Because if you went out and bought all those companies individually, it could be thousands of dollars. So investing into ETFs is a great way to get diversification, get growth, dividends, cash flow, and it's just half the cost. It's a great way to invest and still get great growth, but it's more beginner friendly. Now that we understand what an ETF is, now let's talk about the best ETF to invest in. So starting off with ETF number 1 is ticker symbol VOO. This is Vanguard's S&P 500 ETF. Now, this one here represents the top 500 companies in the United States. The reason why a lot of people invest into this is, one, it's a stock market index. So a lot of people use this to get a general gauge of where the stock market is going or has gone. When you hear the terms in the news like the S&P 500 is down, they're pretty much talking about the top 500 companies, and that's what you're investing in. But why a lot of people invest in it, it's a lot lower risk. The holdings in here are some of the most popular companies in the United States, led by Apple, Microsoft, Amazon, Nvidia, and a variety of other ones like Tesla and Google. Now, a lot of people love investing into this for retirement, and the reason why that is because over the past 90 years, through all the ups, through all the downs, through the Great Depression, the dot-com bubble, the 2008 crash, the 2020 crash, this has had an average return rate of about 10%. Meaning if you just buy and hold, you're in a great spot for retirement. Now, just to put this in perspective, how fantastic this ETF is, if you guys invest $100 every single month into this, getting about a 10% return for 45 years, you're gonna have an account with over $800,000 in it, which is crazy, from $100 all the way up to $800,000. Another reason why I love this is because yes, you get great growth, but you do get cash flow. It offers dividends near and around 1.62%, meaning for every $10,000 you have invested, you're gonna be getting about $162 in cash flow, which I know might not seem like much, but compounded on itself could definitely add up to thousands of dollars. All right, moving on to ETF number 2 that I absolutely love. Before we jump into that, hit that like button and subscribe. Do it right now. All right, let's move on. All right, now ETF number 2 is the one, the only, ticker symbol VYM. Now this one here is Vanguard's Dividend Appreciation ETF. The reason I love this is the dividends. It doesn't get as much growth as VU or the S&P 500, but the reason why I love this one is because it offers a 3.32% dividend, meaning for every $10,000 you have invested, you're getting over $300 in cash flow. Now, if you compound that self for 40 years, that's gonna add up to a bunch of money. Now, the holdings in here are great companies. They're more value picks or blue chip stocks. We have companies like ExxonMobil, Johnson & Johnson, JP Morgan Chase, so still like American icons, but honestly, this one here, just expect a little lower growth. Over the past 5 years, it's had a return of about 20%, which is still good, don't get me wrong, but comparing to the S&P 500, which is at about 55%. So expect more cash flow, more dividends, and more compound interest with this ETF. Now, the reason I love holding this one for a lifetime is obviously that passive income, but another reason is because during recessions or crashes, this one here doesn't fall as much. These are more blue chip companies companies that pay cash flow, and people are more likely to hold stocks that are paying them cash flow, so these stocks don't fall as much as like the S&P 500. Now overall, both these ETFs are great investments and ones that I would highly recommend. Now a little pro tip, make sure you guys have a broker that offers DRIP, which is dividend reinvesting. This is gonna make your account absolutely explode because all the dividends you get, you're gonna reinvest them back into the business and start that snowball effect. So maybe one year you only get $20 in dividends, but then the next year you may get 40, then 80, then 120, then 320, and it starts this snowball, and before you know it, it's paying your mortgage. So guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe, and obviously this is all my opinion, so do your own research before you guys invest. But we'll see you guys later. Hit that like button, subscribe, and we'll see you guys tomorrow in the next one.